The European Central Bank has cut its key interest rate by 0.25%, the first rate cut in 5 years. But the ECB President says the path ahead remains bumpy. Eun-jin tells us more.
On Thursday, the Frankfurt-based European Central Bank cut its key interest rate by a quarter point, taking the figure now to 3.75%. This marks the bank's first such interest rate cut in 5 years. ECB President Christine Lagarde said that inflation had eased enough for the central bank to start lowering rates, but didn't refer to any indication of future rate cuts, and added that there is a bumpy road ahead.
We have to be persistent, we have to be determined, we have to be data dependent, but we cannot give up on the objective. And our objective is to tame inflation and to bring prices back, to bring inflation back to 2% in the medium term.
The ECB's target for inflation remains to reduce inflation to as close to 2% as possible, though data shows that inflation is expected to come to 2.2% by 2025. While the 2.6% inflation recorded in May is well down from its peak of 10.6% in October of 2022, the decline has slowed in recent months, and there have even been hints of an uptick. Meanwhile, inflation in the services sector remains high at 4.1%. The latest rate cut also marks a divergence from the U.S. Federal Reserve, which has yet to start cutting interest rates. Eun-jin, Arirang News.